Blockchain analytics firm Chainalysis has released a mid-year report on crypto crime, and it appears that illicit activity involving cryptocurrency is also declining amid the recent market turbulence. Joining us now to discuss this is Kim Grauer, Chainalysis Director of Research. Kim, it's just great to have you on, and we want to dive straight into it because this is so exciting. Total scam revenue for 2022 is 65% lower than where it was through the end of July in 2021. And you can illustrate this. But Kim, my question is, with more retail investors sitting on the sidelines recently, are just less people subjected to these type of scams?
There's a few reasons why scamming is down. I think the most important reason is that the market is down. So many of the crypto scams that are popular are investment-based scams. They're not people saying, I'm going to send to a scam today. They say, I'm going to make some money today. And so if investment across the board is down, then so are the amount of funds going to scammers. But also one thing we point to, which kind of helps reduce scamming from the other direction, is there's been a lot of law enforcement wins. The CFTC has been proactive on shutting down fake registered scams. And the final thing is we've seen more cryptocurrency exchanges adopting product solutions to help inform people on their exchanges that they might be sending to a scam. And this is all happening on the wave of people are wising up to the way scamming happens in crypto, which is also contributing to the decline.
I'm sorry. You said that they're wisening up to crypto scams. Nonetheless, a huge percentage is still human error. Correct? I mean, this is kind of what creates the scams. It's nothing that there are no people hacking into, crypto exchanges. Usually, it's just when you talk about scams here, you're talking about those tweets that claim to be Elon Musk, and I'm giving away ETH or something, Doge, whatever it is that these scammers say they're giving away. Just give us your address and I'll totally not scam you. And then they scam them. Is that correct?
Yeah, I mean, the scamming is always going to happen. It happens in, the US dollar world. I mean, we live our lives under the assumption that someone is about to scam us if we don't protect with all of our our financial information. So scamming is and always will be a problem, but the amount of publicity around some of these big Ponzi schemes has I think permeated into the collective unconscious of people who are in the crypto world, so that maybe it's still a problem. A scam that you can't really protect yourself against is the rug pull, where maybe you invest in a totally legitimate service, but then someone flipped and then stole the money. I mean, some of these are really hard to protect against. There's no silver bullet. You can just try and do your due diligence and stay as informed as possible.
It's an interesting correlation. You're saying scams are down, but at least here, where I'm coming from right now in India, everyone thinks that the scams are up because enforcement, authorities are going after exchanges and companies related to DeFi. And at the same time, you broke it down into perhaps two or three big areas. Number one, of course, there's self-compliance, self-regulation by exchanges. Number two, trading in general is down. And number three, there's a better understanding of regulation, and regulatory authorities have kind of made some headway into getting into these projects and explaining to any consumer that this is important to note, and also the exchanges. How would you break that down? Do you have data to explain which is higher and which is lower? And in terms of the reason why the cryptocurrency scams are down, like because of regulation or self-compliance or because trading is down? Which of the three? How do you break that down?
I think there is a perception that scamming is up, and we get a lot of questions that conflate scamming with hacking. I mean, it is hard to sometimes completely put a crime into one category, but scamming in terms of investment scams is down because of macroeconomic headwinds and law enforcement wins and product solutions that crypto services are adopting. But cryptocurrency hacking of DeFi protocols in particular is way up. Every single day, it seems like there's a DeFi protocol that has been vulnerable to some malicious actor and namely, oftentimes that actor is North Korea. And so we have different, and hacking is not going to, the price of cryptocurrency does not mean a thing to these malicious actors, except maybe determining when they're going to cash out their stolen funds. So this is something that we would call a price agnostic activity. It's completely separated from market movements. And that is on the rise because of vulnerability specific to DeFi. So I think these two things are happening at once, not to mention that we are in fact dealing with some of the fallout from the massive liquidation events and some of the poorly structured companies that have gone under in the past few months in the DeFi space.